In today's video, we're going to be focusing on the bull market progress for Bitcoin's bull market to just better understand when is Bitcoin going to peak in its bull market. And this has been an indicator that I've been using for a number of years now, just posting on my Twitter every now and then to better understand how far along in the cycle are we. So we'll be talking about that indicator and the bull market peaking in a lot of detail in today's video. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and of course sign up to the free Rekt Capital newsletter in the link in the description down below. So first of all, let's talk about this September 2023 tweet of mine where I spoke about how it was really important to just survive the next 200 days at the time. We'd see a lot of consolidation for multiple months at a time heading into this orange boxed period, and in the past we'd see a lot of consolidation, sometimes even pulling back, sometimes even uptrending at the time. But it was really important to just stay put here going into the pre-halving period and then into the halving period, because that's where the 518 days plus of green upside after the halving would occur. And here's the update to that chart. It was certainly worth the wait. It was certainly worth surviving this orange period, especially since when I posted that tweet, we pretty much went up only for many months in a row, which compared to 2020, pre-2020, in fact, late 2019, it was really outperformance galore. Lot of outperformance from Bitcoin's price action. You can see just through this sliver here of data, price data, you can see that there's been a tremendous outperformance from Bitcoin's price action, which inevitably led to that accelerated cycle thesis. But then if you look at this period of time, this almost, I think it was 8 months, 1, 2, 3, 4, 5, 6, 7, 8 months of reaccumulation time here. That was the longest post-halving reaccumulation period of all time, which makes sense because if we're thinking about an accelerated thesis, price accelerating to new all-time highs and then pulling back, it needed this pullback to reduce the acceleration and to reduce that overperformance, because like I mentioned here, this was overperformance up only. Here we pretty much saw down, up, down, but in a downtrending consolidatory fashion to new lows here, whereas here we saw consolidation and then a breakout. This was pure overperformance. So to combat that, price finds its way to mean revert and just reduce the acceleration and reduce that overperformance to the point where it mean reverts and that acceleration gets to zero. And sometimes we even underperform, which we'll be talking about a little later. So Bitcoin cycles, as much as it cycles from bear markets to bull markets and then back to bear markets, it cycles also from periods of over and outperformance into periods of mean reverting and then underperformance before once again entering periods of outperformance and then mean reverting and even slowing down in the cycle. So we'll be talking about that in this video, in future videos as well. But generally speaking, what's worth talking about is that this reaccumulation period here, 8 months, if we juxtapose that with this period, you can see how pretty much 40%, we saw 40% extension, really 30%, 40% extension in this reaccumulation range here before rallying to new all-time highs. Whereas here we broke out and didn't rally to new all-time highs until that second month here of breaking out. In fact, really that third month, because we broke out initially here, second month and third month, that's when we rallied to new all-time highs. So you can see how this reaccumulation period, there was a lot of slowing down in the cycle, and quite understandably so. In fact, whatever acceleration occurred in this cycle here, or at least in this portion of the cycle, whatever acceleration occurred, we actually reduced that cycle acceleration pretty much to zero in this historic accumulation period. And you can see right over here as well, we saw a lot of reaccumulation initially, but then price broke out to new highs, whereas in this cycle we were still reaccumulating. So if we then look at this period, extending that reaccumulation, looking out to those new all-time highs, we'll see that price slowed down, reduced the acceleration in the cycle, and pretty much resynchronized a little bit more, although it did rally to new all-time highs, whereas here we weren't at new all-time highs, and here, well, we just rallied to new all-time highs. So pretty much in line to a certain extent with the cycle. And then afterwards, we actually pulled back for a considerable amount of time, which once again is slowing down the cycle in some way. So if we look at this period here, specifically this price discovery correction phase, effectively, then we had that same sort of price discovery correction take place at that same moment in the cycle in 2021. And in 2017, we also saw a price discovery correction, which was pretty shallow, but we did see a price discovery correction nonetheless in 2017 at that same time. So roughly at the same time, we saw a price discovery correction take place. But what's really important to talk about overall is the bull market progress and how things have slowed down in this period and have slowed down in this extended price discovery corrective phase to the point where now we're trying to break to new all-time highs, but we're still just consolidating behind the highs. Whereas at this point in the cycle, we also saw a pullback, and we were seeing another lift up for Bitcoin to try and challenge these highs. So based on where we are now, we were a little bit further along compared to this cycle here, whereas compared to 2017, we were getting very close, or at least we were already in that parabolic upside phase, and we were getting very close to the bull market peak ultimately, which was not too far away around the corner. And this is what these yellow circles effectively showcase, where we are exactly in the cycle right now. And that's also pretty much a function of time, because after the halving, we tend to see a bull market peak occur 550 days after the halving, or even 518 days after the halving right over here. So there is a little bit of a 30-day lag here across time. And so you could even make the argument, well, are we extending in the cycle bit by bit every 4 years by 30 days or so? And you'd be perfectly critical in a positive way to make that sort of assumption, because maybe there is some sort of extension going on by an additional 30 days or so. So even if we were to just say, okay, 518 days to 550 days after the halving, that would get us into September or October 2025 peak. And if we're thinking about cycle extension by a natural 30 days, which the traditional halving cycles suggest anyway, potentially, that gets us into November. But the danger here is that if we're going to keep moving the goalpost, then at some point we're going to miss that bull market top. And so in the way that I'm viewing it is, let's stick to the traditional halving cycles, assume that it's going to be September, October 2025, and whatever bonus time happens after that, it's going to be bonus time. And at least at that point in time, partial profit taking, a lot of profit taking, principal taking off the table should probably be the main strategy here to just secure those gains after a period of holding from really close to the lows. And really important to just secure those gains and manage the risk accordingly, because ultimately, if you're thinking about this move here, capturing the majority of the trend is really important. And if we continue to rally, let's say even 30,000, 40,000, 50,000, that's still only going to be a fraction of the upside that we already saw dating back to November 2022. So if you really think about it macro-wise, the risk of a bear market from current price levels versus whatever upside we have left, then you can see that the risk to reward is very, very skewed. There's potential upside of this amount. Let's say price goes to 130, 40, 50K versus suffering a 60, 70% pullback, wherever that might take us. The risk to reward definitely favors the downside as the upside starts to shrink as we get closer and closer to the end of the bull market. And we're 88% of the way through that bull market. So this is just generally a fantastic chart to showcase that there's a mirroring effect of the Bitcoin halving. Pre-halving is roughly the same amount of time post-halving. And we've seen that in the past before. And it's always roughly 518 days plus 30 days to either side. In this cycle, 2016, it was 550 days before the halving, and then we saw a shorter post-halving period by comparison, and here we saw a shorter pre-halving period by comparison to the post-halving. And in fact, this is actually very similar to a very similar setup to what we're seeing in this cycle. So this cycle had 517 days pre-halving see a bear market bottom in the same way that we saw 2018 replicate 517 days before the halving, that bear market bottom. So if history repeats based on 2020, then we could see a 550-day post-halving bull market peak, which would be in effect essentially October 2025. So if we look at all of these data points, then this orange circle just showcases roughly where we are in the cycle by standards of history. And if we're talking about September, October, with it just being July now, July, August, and September, that's already, and then October, that's already 2 to 3 months potentially that we have left in this bull market. So if we're thinking about this being the entire cycle that we've already seen in terms of upside from bear market bottom to bull market top, and potentially this additional upside potentially over a period of 2 to 3 months extra, then it just showcases to us that maybe we have a very small slither of time and price expansion left versus the price expansion and time that we've already seen elapse over the course of this cycle, which comes down to that 88% figure. So with only 2 to 3 months left, at least by standards of history, because there are many people talking about cycle extension, cycle elongation, seeing a bull market peak in 2026. We can talk about that in future videos, but really important to just focus on the data. And many people are very, very happy to start throwing away time-tested principles out the window, whereas really important to rely on these sort of metrics, because they're not going to sway you as much as throwing everything out the window will. And throwing everything out the window to chase a new narrative such as M2, which we'll also be talking about in the channel, so subscribe to the channel for more videos. These sort of new narratives, they're shiny and novel, and they may be right, but they're going to be right to an extent. And it's really important not to throw away everything out the window, because that's also an emotional thing as well, and you don't want emotional things clouding your judgment as we enter the most important phases of the cycle, because all of this work that we've been putting in since late 2022, we really need to make the most of navigating this bull market appropriately to lock in those gains and position ourselves for the success that we've been working so hard for so long. And if you need help with navigating the cycle, then of course subscribe to the channel, but sign up to the free Rekt Capital newsletter in the link in the description down below if you need additional guidance as we go along in these crucial last few months of the Bitcoin cycle. But that being said, subscribe to the channel for more videos like this in the future, and feel free to check out my Bitcoin roadmap video here as well if you haven't checked it out. Like this video if you enjoyed this one, and subscribe for more. Speak to you soon.